Hello guys, welcome back. This is a very important video for paper number 8, cost accounting. Here I was recording right now at 2:40 a.m. So kindly bear with my voice and all if you're feeling any difficulty over there. Here I just want to give you a quick clarity for the 200 MCQ series we have done for costing. Question number 5, there is a slight change in the answer. It is option A. You will see that under Taylor differential plan, he is paid only 83% of the piecework rate. It is a book bag we have done. Next, 35. Option is C. Instead of D, you need to write option C. The 35th question will be based on the night shift allowances. Okay, the following is not treated as a manufacturing order. Lubricants, cotton waste, and night shift is treated as a manufacturing overhead. So, which is not treated as apportionment of administration overheads. But actually, past question paper, this was the answer key they have given. In many mock tests also they have given. Okay, but if you go through the inside module of that labor costing chapter, treatment of the employee cost, in that they have clearly mentioned it is a part of production overhead. If it is a part of production overhead, it comes under manufacturing overhead. Then you should not charge it as a, you should not treat them as other than the manufacturing overhead. So here the best option you can go is option C. But there is almost 2 to 3 questions. There is a confusion regarding the answer key itself. Okay, so here I'm just trying to confused about whether we'll go with C or whether you'll go with D. If you want to go with ICMA answer or ICMA past paper answer, it is option D. As per the book text, as per the inside module, it is option C. Next, we'll go with 100 question. 100th question is based on, just a minute. Yes. Yeah. Which one of the following is considered to be a normal loss of material? Here, the pilferage is an abnormal loss. Here, answer is option C. Loss due to breaking the bulk. Breaking the bulk means, let's say, if I get 100 kgs of rice bag, if I'm going to divide it into 10 bags of 10 kg each, I may get a sufficient decrease in the small quantities. So that is known as breaking the bulk. So option C is the right answer. Now it's time to start with Super 30 additional MCQ series. This you can treat them as bonus because you have given a huge response to that double hundred MCQ series we have done. If you want for group 2 also, do comment below. Okay, we will surely do it for December 2024 attempt. Now we will start with question number 1. The daily consumption of a material is 64 to 80 units. It takes 30 to 40 days of a receipt of this material after initiating the order, and reorder quantity is 4,000 units. Calculate the maximum stock level if the reorder level is 3,200 units. We'll go with first question. First, maximum stock level. The formula is ROL plus ROQ minus minimum rate of tank consumption into minimum reorder period. So ROL is given 3,200, ROQ is given 4,000, and minimum consumption rate is given 64, and minimum reorder period is given 630. So if you add this, it will become 7,200. If you multiply this 64 into 30, it will become 1,920. And if you subtract this, it will become 5,280 units. We could not try to prepare that options for that question, so we are directly solving the sum. Maximum stock level is equal to ROL plus ROQ minus minimum consumption into minimum average period. So this is a minimum, here it is a minimum, so we are multiplying this together and we are adding together to find out the reorder level. Okay, and don't ask this PDF again and again in WhatsApp. You are not going to get this PDF. Okay, you just, if you want, you just take the screenshot and then you will take an answer screenshot and then you can keep saving. We are not going to send this PDF. We are not going to give PDF to you. Okay, next question number 2. A worker has produced 1114 44 units in place of 120 units in 10 hours. The normal wage rate is 75 per hour. Find the total earnings under row 1 plan. That's what the question is. Very simple. Row 1 plan. Row 1 plan formula, time taken divided by time allowed into time saved into rate per hour. That's what the bonus only. They are asking total earnings. Time allowed was 10 for 120 into 144. Here the key point is a worker has produced 144 units in place of 120. The set target was 120 in 10 hours, but he has produced 144 units. What you need to do? What is the time allowed for 144 units if I produce? Then it will be 10 hours for 120 products, means for 144 units, how many hours? It is 12 hours. On the 12 hours, I am time allowed is 10. So it is 2 hours is time saved. This was the crucial question in this. Next, under row 1 plan, normal wages is 10 hours into 75. So it is going to be 750. Then add bonus. It is nothing but time taken divided by time allowed into time saved into rate per hour. That is 10 by 12 into 2 into 75. It is 125. If you add, you will get 875. Alternatively, you can do it in one step. H into hour. H is a hours into rate. Then S minus H. The time which is set standard minus actual time taken divided by standard into 10. That's what the time saved by time allowed into time taken into 75 rate per hour. In any alternative method, you can do. Fine. We will move on to question number 3. There were 5,000 workers in a factory on 1st April 2016. New entrants in service during the year 2016-17 were 250 and separations were 130. So it is a 250 new entrants, 130 separation. What is a labor turnover rate using flux method? Flux method, we need to calculate the formula. So we will go with the formula. Flux method is equal to half of the number of new entrants plus number of leavers, that is the half is gone, left average number of workers during the year. So it is 1 by 2, 250 plus 130 divided by, here the important point is this 5060. How this 5060 average is fine? This was my opening. Average is nothing but opening plus closing divided by 2. Opening was 5,000. At the time of opening, 250 persons has entered minus 130 persons has left. So at the end, it has become 5120. If I add and I will take an average, it will become 560. So it is 560. 250 plus 130 is equal to 380. 380 by 560 into 100 into half of it, you will get answer 3.75 is your answer. Next, we will go with question number 4. 10,000 units of material X are consumed per year, having per unit cost of rupees 20. Cost of processing an order is rupees 50, while annual interest rate is 5%. If an annual carrying cost per unit of material X is 15% other than interest, what is EOQ? What is the number of orders per year? If I was speaking very slow, if you are feeling that, just watch this video at 1.25x speed or 1.5x speed as per your convenience, as you are in the preparation stage. Now we will go with question 4. They are asking EOQ. What is the EOQ formula? Repeat with me. Root of 2AO divided by C, where A is the annual demand, that is 10,000. O is nothing but an ordering cost. C is nothing but a carrying cost. Carrying cost should be calculated on the purchase value. Always it should be calculated on the purchase value, even though they are given calculated 10% on average inventory, 20% on average inventory. You should calculate on the basis of the purchase price. So 20,000 into 20 rupees into 20, it will become 4. So root of 2AO divided by C, it is 2 into 10,000 into rupees 50 divided by 4. You will get 500 units. But they are asking how many orders along with that. It is nothing but annual demand divided by EOQ. Annual demand is 10,000 units. For one order, I'm going to order 500 units. So how many orders I need to make? 20 orders I need to make. Then how the options they will frame, no? For this, they will give you 525 orders, 250 units, 20 orders, 520 orders. Now you need to choose option C. Next, fifth one, interesting one, important one. They may be test you. Production and sales was 50,000 units and 42,000 units respectively. Royalty paid on units produced was rupees 5 per unit and 7.5 per unit sold. Hiring charges of an equipment used on production was 1,80,000. Designing charges is 48,000. What is the direct expense of cost 10? So cost 10 they are asking, no. So what you can do, basically, cost 10 is a direct expense, which is directly related to that cost of that product. So we will take royalty on production, 50,000 units into rupees 5, and royalty on sales, 42,000 units into rupees 5, 7.5. Hiring charges, design charges. Mostly in CA inter level, and if I want to tell one more step further, in CMA final level also, they are going to test you this cost. So in this cost accounting standard 10, basically whatever they have given as per cost accounting standard 10 alone, you need to simply add everything to find out the value. Here, the production related, royalty related production related to purchase should be multiplied by the purchase value. Royalty related to the production related to the sales should be multiplied by the selling price of the product. So the royalty selling units of that product. Okay, so if you multiply 50,000 into 5 will become 2,50,000. 42,000 units into 7.5 will become 3,50,000. Hiring charges is 1,80,000. Design charges is 48,000. If you add everything, it will become 7,93,000 is your answer. Then we will move on to question number 6. Your work measured study measurement study was carried out in a form of 10 hours. The information generated was units produced was 350, ideal time was 15%, performance rating was 120%, relaxation allowance is 10% of the standard time. What is the standard time of the each unit produced? This we already covered in 200 MCQ series, but I don't remember the question number. So I'll just give you a quick overview or a revision for that question. Whenever that question is arise, first step, find out the total time. That is 10 hours is there. So total into 60 minutes, it will become 600 minutes. On that ideal time is 15 minutes. So the actual time, that is efficiency is 85%. That is your actual time. On that normal time, you need to calculate. For that normal time value, you need to take actual time into performance rating. That is 120% will give you 612. On that you need to add relaxation allowance. On that, suppose they are saying here, the main point is they say 10% on standard time. They may try to confuse you by giving 10% on normal time. You may simply do 10% on normal time, directly you can do 6.12. Okay, sorry, 61.2, right? 61.2. Okay, directly you can do, but instead they have given standard time, but you don't know the standard time. So what you can do, one thing, that is 1 by 3 on cost is equal to 1 by 4 on sale. The same concept is applicable over here. So they are given, so treat them as a normal time, treat them as a standard time. They have given this. Okay, that is 10% of standard time. 10% is nothing but 10 by 100, it is nothing but 1 by 10. 10%, 1 by 10th of the standard time, but we need the cost. For that, you need to reduce the denominator by 1. So 1 by 9 on normal time. On that, calculate 1 by 9, put the value 68 and add this. You will get a standard time of 680. But they are asking standard time of each unit. So the standard time of each unit will comes to 680 divided by 350 units is given. Whatever the units is given, you can put. So it will become 1.943 minutes. Next, we'll go with question number 7. Important question, interesting question. Calculate the reorder level from the following data. It is not date, it is data. Okay. Lead time is 3 weeks. Safety stock is 100 units. Annual uniform usage is 2,600 units. So The ROL, the reorder level, the other formula is safety stock plus lead time consumption. Many of them are not aware of this formula, so kindly understand this. Safety stock is nothing but safety stock. They have given 3 weeks. In 1 year we are having 52 weeks, so 2600 units divided by 52 weeks will give you 50 units. On that 50 units you will multiply by 3 weeks, will give you 150 units as a safety stock. On that lead time consumption is 100 units, so it will totally become 250 units. ROL is equal to, repeat along with me, ROL is equal to safety stock plus lead time consumption. Safety stock is equal to number of units that given divided by 52 weeks into 3. Okay, here here, annual uniform usage divided by 52 weeks for per week usage into 3. That is my safety stock, because lead time should be multiplied to calculate the safety stock. On that safety stock, uh, I need to add that consumption. That lead time should be multiplied, and 100 units of the safety stock should be added. Okay. Again, I will repeat, ROL is equal to safety stock plus lead time consumption. For that purpose, that safety stock they have given is 100, and then a lead time consumption for total consumption divided by 52 weeks into 3 weeks. So that total lead time is identified. Then that should be multiplied and units will be given, that is 150 units. On that 100 units you should add. So total it will become 250 units. Then question number 8. Then standard time for a job is 20 hours, rate is 2 per hour. The actual time taken by an the actual time taken by an worker is 15 hours. Calculate his earning under Barth variable sharing plan. Many of them are not aware of this plan. It is in your study material only, guys. So we'll go with Barth variable sharing plan. It is nothing but rate per hour into root of standard hours into actual hours taken. Okay, actual hours. It is very simple. Standard hours into actual hours. Okay, repeat along with me. Barth variable sharing plan is equal to rate per hour into root of SH into AH. Root of SH into AH. Rate per hour into root of SH into AH. Rupees 2 into root of 20 into 15. Why I am repeating the formula again and again? Because you are not going to get it PDF. So revise it here itself. Root is 2 into root of 20 into 15. So if you take the root value, you will get 17.321. If you multiply by 2, you will get 34.64. So first set we have done. First 8 questions we have done. Another 22 to go. We will quickly do that. Okay. Question number 9. In a factory, number of employees at the beginning of this 380, at the end is 420. During their 18 employees is resigned, 6 were discharged. Out of them, 16 were replaced. Find the labor turnover in the factory under flux method. So very simple. Additions, I need to calculate. For additions, how many people is newly added? For that only flux method is needed. Okay, for that purpose I will take that closing value. On that opening value is given 380. On that 18%, some persons as discharged, some persons as relieved, so total I will get 64. Correct. So the replacement they are given 16 separately, so 64 and 16 is a replacement. So flux formula is 1 by 2 into labor turnover rate. They are asking rate means I need to multiply by 2. So under flux method is 1 by 2 into 64 plus 16 divided by 400 into 100. Okay. Number of additions plus replacement divided by average number of workers. How I find the average number of workers? Opening plus closing divided by 2. Opening is 380, closing is 420 divided by 2. It is 800 divided by 2. It is 400. So half of 80 by 400 into 100. Half of 80 into 480 divided by 400 into 100 will give you 10 percentage. That's it. The answer is 10 percentage. Then the answer for this 10th one is 10 percentage. 11th one, find out the actual overhead for the month of October 2016 when the actual mission hours is 10,000 worked. There is an under recovery overhead of 30,000 by using the mission hour rate. So they are asking what is an actual overhead incurred. Mission is how much? 10,000 into 30 will give you 3 lakh. It is under recovered. You need to add it. So that is 30,000. If you add, it will become 3,30,000. That's it. If you want, you can see it. Overhead absorbed machine hour rate into actual machine hours. That is 10,000 hours into rupees 30. That is 3 lakh. Under recovery. So we are adding it 30,000. So totally it will become 3,30,000 as an actual overhead for the month. Then so that's question number 11, right? So we'll go with question number 12. The average quarterly consumption, the keyword is quarterly consumption of a material is 5,200 units. Quarterly 5,200 units. Unit cost is 65. That is your purchase cost. Storage cost is 15 per unit. The ordering cost is 150 per order. Find the EOQ. EOQ is very simple. Root of 2AO divided by root of 2AO divided by C. You are right. Root of 2AO divided by C. That is quarterly consumptions there. You need an annual consumption. That is 5,200 into 4. That is 20,800 units. Root is equal to root of 2 into 20,800 divided by 150 into 150 divided by 65 into 15 percentage. Why 65 into 15 percentage? Because it is C. C is nothing but carrying cost per unit per annum. Remind it. A carrying cost per unit per annum. Okay, for 1 unit for 1 year, what is the carrying cost? That is 2 into 20,800 into 150 divided by 9.5. That if you take that value, they will give you 800 units. The answer is 800 units. Then come to question number 13. At a level of 60,000 units of output, factory overhead was 3,75,000, out of which 40 percentage was fixed. Find the amount of factory overheads at 78,000 unit of output. Interesting question. 30, slightly tricky. First, you need to find 3,75,000 into 60 percentage will give you 2,25,000. They said that is a variable portion for 60,000 units. So for that 60,000 units, for that is variable, we will find per unit cost. We will find what? Per unit cost, because variable cost per unit remains constant. So it is 2,25,000 divided by 60,000 units. You will get rupees 3.75 per unit. That fixed cost is 1,50,000. We already subtracted from this value. How this fixed cost is arrived? 3,75,000 minus 2,25,000. Okay, 2,25,000. 1,50,000 is arrived. They are asking for 78,000 units. So overhead cost is equal to 150. Fixed cost is going to be remain same. Variable cost varies with output. So that is 78,000 into 3.75. That is 4,42,500. Then 14th one, we will read the question. The answer for question number 13 is 4,42,500. Then question number 13. 13 we have done. Yes, we have done. We'll go with question number 14. Okay. The standard time allowed is 3 minutes per unit. Normal rate is rupees 30 per hour. Taylor's differential piece rate on the basis of 80 and 120 percentage are below and above the respective standard. Workers of W produces 225 units in a 8 hours day. Calculate his earnings for the day. So we will calculate whether he is underperformed or overperformed. If they overperform, we will give 120 percentage. If it is underperformed, we will give 80 percentage. Standard units per day, that is 20 into 8, so it is 160 they need to do, but actual what they have done 225. So for that, it is basically above the standard. For above the standard, we will reward them with 120 percentage. So 120 percentage of 30 divided by 20 into 225. Okay, you will get 405, or else you will go with the other technique. Okay, what they have given, 30 per hour is given. Okay, 30 per hour is given, and the Taylor rate is given, and the extra that 20 percentage premium is also given, right? So what you can do, rupees 30 divided by rupees 20 equal to 1.5 per unit they have given. On that, calculate the 120 percentage. If you calculate 120 percentage, it will become 1.8. Then it will become 1.8 is your answer. On that, multiply by 225 units, you will get 405 rupees. Okay, this is first step, and then this is the second step. You will get the value 120 percentage of 1.5 will give you 1.8. On that, calculate that output actual, that is 225. You will get your answer is 405. Then question number 15. Yes. Direct material and direct labor of cost job number 11. I am expecting this question in your examination. Direct materials and direct labor cost is job number 111. That 760 and 550 is given. Overhead charge is 60 percentage of the direct labor. If the profits include 20 percentage of the price, charge to customer is nothing but your selling price. Okay. They are asking what is the cost. Okay. They are asking the profit charged to the customer. Direct material given a 760 will write. Direct labor we given 550. Overhead they said 60 percentage of the labor, 60 percentage of labor is done. So total cost of the job we have find out. They given profit is 20 percentage on the customer price. That is 20 percentage on the selling price. It means 20 percentage on the selling price means it is 20 by 100. If it is 20 by 100, shall I write it as 1.5 on selling price is equal to 1.4 on cost price. So we know only the cost on 1640. Find out 1 by 4. You will get 410. If you add all this, you will get a price charged to a customer. That is a job contract price. You will get it. Okay, the answer is 2050. Next, another 15 more to go. Quickly, we will cover question number 16. In a factory, worker produced 14,000 units in a day of 8 hours. Wage rate per hour is rupees 40. Fine. Standard output is rupees 2 per hour. Per hour, 2 units. Under differential piece rate system, a worker is paid at 83% when his performance is below the standard, and 125% piece rate when his performance is at above the standard. Find out labor cost of the worker for the day. Labor cost. It means they are asking the total value of that cost. What you will do? Standard production per day. So 8 hours into 2 units. So total 16 units in day you need to produce. Efficiency of the worker is only 87.5 percentage. How it is 87.5 percentage? Because a worker produced 14 units in a day of 8 hours. But what is the standard? 8 into 2, it is 16 units you need to produce. So it is efficiency of the worker is only 87.5 percentage. So it is less than 100 percentage. He is paid at a lower piece rate. What is the lower piece rate? 83 percentage is a lower piece rate. So what is the earnings? 14 rupees of 20 unit of 20 into 83 percentage. You will get rupees 232.4. Rupees 232.4. What is rupees 1420 and all? What is 1420? They have given 14 is number of units, and that uh here 40 14, right? Just a minute, just give me a second. Kindly change this to 40 and kindly change this to rupees 434.8, right? This was the current answer. There is the answer key is wrong in the study material. So the earnings is 14 into 40 into 83%. I just want to give you one more better clarity over this question regarding those percentage basis, right? What you can do, I'll try to write a conclusion over here. For Taylor differential piece rate system, if it is above use 120. If it is below, use 80. If it is only differential piece rate system, no Taylor, at the time above, use 125 percentage. If it is below, use 83 percentage. Okay, there is lots of confusion regarding the MCQ in the study material itself. Okay, for Taylor DPR, it is 120/80. For only differential piece rate system, it is above 125 and below is 83 percentage. Here the earnings is 14 into 40 into 83% will give you 43.4433 4.8. Then next question, what we need to see, this everything we have done, profit included. Yes. Now 17th question. It is you can easily do. Average annual consumption of spare parts is given, units is given at a price of 36. That is your purchase price. Storage cost is 20% on average inventory. Whenever they are given average inventory, always calculate it on purchase price. That is repeat along with root of 2AO divided by C. It is into 2 into annual consumption is 18,250 into 50 divided by 36.5 into 20 percentage. That you will get a final answer of 500 units. Easy, quickly do. Question number 18. The Mrs. S furnishes the report. Number of employees at the beginning. This is your opening. Yeah, number of at the end. This is your closing. So with this, if you add 650, 650 divided by 2 will give you 325 as an average. Resigned is given, discharge is given, replaced due to designation, and discharge is given. Okay, 50 employees is gone. They are replaced with 4. So I think so. The new entrance is going to be 10. Okay, we will check. They are asking labor turnover rate for the factory for the separation method and replacement method, two different methods separately. So the separation method, they are not asking flux method. So that is asking separation method. What is the separation method? Separation is number of members separated. That is 40 plus 10. That is 50. 50 members has got separated. Though the 50 members has got separated, the 50 divided by 325. How this 325 is arrived? 325 is arrived by using the average. How the average opening plus closing divided by 2. So 650 divided by 2, it is 325. So the separation is 40 plus 10. So total 50 is a separation. 50 divided by 325 into 100 will become 15.38 percentage as a separate method. Replacement method, number of employees replaced. How you can need to calculate that? Here number of employees replaced is 40 they have given. So the answer is going to be 40 divided by 325 into 100 because the average is going to remain same for everything. So it is 12.31 percentage. Next question number 19, here itself we will do so that you can easily take a screenshot over here. In this 4 questions we will quickly do. Question number 19, a worker has produced 154 units in 10 hours instead of 15 hours. If the normal wage rate is rupees 30 per hour, find this remuneration in the row 1 plan. We have already done the total earnings. You can try this sum. The answer for the sum is 400. The answer for the sum is 400. Okay. A factory cost is 3,80,000. Question number 20. Factory cost is 3,80,000. The cost of production is 4,10,000. Office and administration overhead are 20% of the factory overhead. What should be the amount of prime cost they are asking? Assume there is no stock acquisition. First step is I don't know that factory overhead. I need that factory overhead to find out further. So from the cost of production, I will subtract my FC, that is factory cost. I will get 30,000. That 30,000, from that 30,000 difference, I am going to find out the fixed overheads. That fixed factory overheads or factory overheads. Factory overheads is nothing but they said it is 20% of factory overheads is office and admin. So I need to find the 20% value is there. So the admin value is going to be 30,000 divided by 20%. This first step 1 is to find out the admin cost. That is cost of production minus factory cost is equal to admin overheads. That admin overheads is 30,000. On that factory overheads, we need to find the formula for factory overheads. They given it is 20% of a factory overhead is admin. So what we will do, we know admin. So from that admin, we will divide 20% to get an 100% of the factory overheads. Then only if you calculate 1,50,000 into 20% only, this 30,000 will come. Okay, so factory overhead is done. So the step before that prime cost is arrived. From that prime cost, okay, from factory cost, subtract the factory overheads. You will get 2 lakh 30 as your prime cost. So the answer is 2 lakh 30,000. The answer is 2 lakh 30,000. You may get this sum because it seems to be easy. Some, if you don't have a logic of cost sheet, if you just simply mugging up of the cost sheet, this answer you may trying differently, or it may be difficult for you to prepare. It will be time consuming for you. So make sure you are doing it better. Question number 21. Material with invoice value of 10,000 was received in the stores department. The transport cost was 200. Since the material is leaked in transit, the damages to other goods was 350 has to be paid to the transporter. What would be the material cost? Listen, as per cost accounting standard 6, material cost includes purchases, transport inwards, this two, and excludes any damages or penalty paid to any authority. So here 350 you should not add, you should avoid it. Then what you need to do? Just 10,000 plus 200 will become 10,200 as your answer. Then we will move on to question number 22. Same from cost sheet. Prime cost is 12 lakh 50,000. Work cost is 20 lakh. What is office overheads or 30% of the factory overheads? What is cost of production? They are asking. For cost of production, what you can do? Works cost plus office overheads. What is work cost? It is 20 lakh. That only you know. Okay, you don't know anything further. Okay, first step, difference between 12 lakh 50 and 20 lakh is 7 lakh 50. That 7 lakh 50 is nothing but your factory cost, because prime cost, if you add the factory overheads and then only you will arrive at work cost. Work cost is nothing but your factory cost. That factory cost is arrived. From that, if we subtract the factory overhead, I will get the prime cost. Reverse calculation. That 7 lakh 50 is my factory overhead. On that, they say 30 percentage is for office overhead. So on 7 lakh 50, calculate 30 percentage will become 2 lakh 25,000. On 2 lakh 25,000, they said find out cost of production. I know work cost. Factory overhead plus admin is equal to cost of production. So factory overhead is 20. Factory cost is 20 lakh plus admin, office and admin is 2 lakh 25,000. So answer is 2 lakh 22 lakh 25,000. 22 lakh and 25,000. Kindly adjust with my voice, guys. I'm completely gone out of my voice. It's completely draining for me. Question number 23 and 24 we'll see little bit later. Okay, we'll quickly complete question number 25. This we have already done. Calculate a direct expense as per cost. And what is the trick I given? Whatever given, just add it. Royalty paid add, royalty paid on production is add, royalty paid on sales is add, design charges add, machine expense add, software development charges add. If you add everything, you will become 3,51,000. Okay, 3,51,000 is your answer. Question number 26. In a certain week, the time allowed to a worker of job X is 48 hours. He took 30 hours of time for his job. His effective rate of earnings of the worker under row 1 plan was 55. Hourly effective rate of earnings 1 hour. How much he is earning effectively? 55 rupees he is earning. That rate they have given. Find the normal rate of wages. Basic rate of wages is different from effective rate. Okay, so how you can find? It is the same, go with the same formula. What is the total earnings formula? Time taken into rate divided plus time taken divided by time allowed into time saved into rate per hour. On that, this value they given, that is 55 hours. 55 rupees is an effective rate, into 30 hours is going to work, so it is 1650. On the what is this 30? He took time taken. On that R value rate, I don't know. This 30 divided by 48 into 18. This 48 is the time allotted, that is time allowed. 30 is the time taken. 18 is the differences between this. So 18 is your time saved. If you solve this, you will get 11.25 R. This is your 30 R. If you add, it is 41.25 R. It will become 1650. R is equal to 1650 divided by 41.25 will equal to rupees 40. Rupees 40 is a hourly rate. Effective rate of earnings is what? After adding that this one premium, that is 55. Okay. Now Question number 27. Easy. You can easily do it. Total from the following information given, total number of operators working in a department is 300. The number of working days per year is 300. Fine. 300 employees working for 300 days into how many hours a day? 8 hours a day. The department overhead was 3,42,000. 5% of the total number of days is normal ideal time. Then 95% is an effective time. So 300 into 300 into 8 into 95 percentage. After subtracting that 5 percentage, I will get 6,84,000 hours. On 6,84,000 hours, I need to find DLHR. What is DLHR? Direct labor hour. Direct labor hour, overall rate for direct labor hour. On that, 3,42,000 is the amount they have given, divided by number of hours. If you subtract, you will get 0.5 per hour. I will give you a trick over here. Many of them are confusing whether to put the amount on the top or whether to put amount on the below. Okay, very simple. The total overhead spend is what? 3,42,000. Whenever you multiply the price with that hourly, you need to arrive at 3,42,000. The hours are higher, the amount paid is lower. It means the amount should be on the numerator, the hours should be on the denominator. If I was speaking slow, just slightly increase that speed of in the YouTube. Okay, in the below settings you are having it, because I don't know how long it took to complete. Okay, next question number 28. The opening stock and the closing stock and purchases of materials are respectively 10,000, 16,000. Kindly understand, opening closing purchases given, they are not given opening purchases and closing. Don't confuse over here. So make sure you have a clear knowledge. Don't simply mug up and go. Opening stock plus closing minus closing stock plus purchases. So opening stock plus purchases minus closing stock will give you 78,000 during a production period. What is the inventory turnover ratio? The formula for inventory turnover ratio is COGS divided by average inventory. COGS is nothing but cost of goods sold divided by average inventory. It is nothing but average inventory is nothing but opening plus closing divided by 2. Opening 10,000 plus closing 6,000 divided by 2 will come 13,000 rupees. That COGS, we already find 78,000. 78,000 divided by 13,000, it is 6 times. It is not 60 percentage. Don't add percentage for turnover and all. Turnover should be calculated. Turnover ratios is always calculated on timely basis, times basis. So it is 6 times. Okay, suppose in a time, how many the inventory will be asked, they may ask you on number of days. If they ask number of days, it is 365 divided by 6. If they ask in months, it is 12 divided by 6. Okay. Inventory turnover period, they will ask for inventory turnover period. There may be a creative question on that. What you need to do, if they ask in days, it is 360, you can assume, divided by 6. If you put it is 60 days, once you need to have an inventory, you will assume as 60, write an assumption. Okay, if not, assume 365 divided by 6. And why I am discussing this, they may give you in options. Okay, at the time you don't think that the 360 assumptions is not there, try to assume it and write it. Okay, then we'll go with question number 23. Yeah, listen this carefully, how you need to go with semi-variable component. A variable and semi-variable cost of producing 50,000 units is rupees 6 per unit and 12 per unit respectively. If at 20,000 units, this total cost are up to 4,80,000. For 20,000, it is 4,80,000. What is the amount of fixed cost of that semi-variable component? First, we need to have a total cost. What is the total cost they have given? Variable plus semi-variable. 6 plus 12 is equal to 18. On 18 rupees, calculate 50,000. 18 rupees, calculate 50,000, that is 9 lakh. At which capacity? 50,000 capacity. They asking cost at 20,000 capacity, they are given 4 lakh 80. So here I know 50,000, here I know 20,000. This is in units. Okay. Now this total cost I know. So the differences is merely because of this unit. what is the formula to find out variable cost per unit? Difference in cost divided by difference in units. So difference in cost is nothing but 9 lakh minus 4 lakh 80,000 divided by 50,000 minus 20,000. So 9 lakh is 4 lakh 20,000 divided by 30,000. Variable cost per unit is 14 per unit. 14 per unit. Okay. In examination, either you can go with this method or either you can take 50,000 and you can find out. But we need actually 20,000 is a very easier thing. For variable cost is rupees 14 into 20,000, 2 lakh 80. The total cost is 4 lakh 80, out of which 2 lakh 80 is gone. 2 lakh is a fixed cost. If you want to try it in 50 percentage, 50,000 level, variable cost is rupees 14 into 50,000 will give you 7 lakh. Total cost is 9 lakh. You already find out from that variable cost 7,000, variable cost 7 lakh. If you subtract, you will get 2 lakh as your answer. Understood? Here the answer is 2 lakh because they are asking what in 23 fixed cost component of that semi variable cost, that is 2 lakh. Next, 24. Interesting one, important one. The annual demand for an item is 3,200 units. So A is 3,200. Unit cost is 6. That is carrying cost is 6. Inventory carrying cost is 25 percentage per annum. So 6 into price, unit cost is purchase price, 6 into 25 percentage. I think so. It is one half of it. It is 1.25 somewhere. Next, what is the value they have given? 6 into 25 percentage you will put in a calculator, you will put it because I'm completely went to a sleepy mode. Just try to complete it quickly soon, guys. I know you are going to watch it this video till long, so try to understand it. 1.5, right? I will try my best of my efforts to make you understand. So it is 1.5, right? On that cost one, the cost of one procurement is 150. Determine the time between two consecutive orders and assuming procurement on EOQ. So AOK is equal to 2 into 150 divided by 3,200 into 6 into 25. Okay, that will give you 800 units. Number of orders is equal to 3,200 divided by 800 will give you 4 orders. They are asking time between 2 orders, that is 12 months in a year divided by 4. Time between 2 orders is 3 months. We'll just try to calculate 2 into 150 into 3,200 will give you 34, will give you 3 crore 45 lakh 60,000 divided by 6 into 25 percentage. 6 into 25 percentage will give you 1.5. Okay, where I missed it? 3 lakh 45, 3456000 divided by 1.5, 23. If I take root of 2304000, something is wrong. Just a minute, wait. We will read the question. Slowly, steadily, we will read. An annual demand for an item is 3,200. Fine. Unit cost is 6. Fine. Inventory carrying cost is 25 percentage per annum. If the cost of one procurement, so it is going to be your purchase price. Purchase price on that, calculate 25 percentage. 150 into 25 percentage. The answers given in the module is completely differ. 150 into 25 percentage. What is the answer, guys? 25 percentage will give you 37.5, right? 37.5. Here, what you will do, just try to erase it. 150 into 25 percentage. Okay, that will give you root of 37.5. Here, then here I need to put 6. So 3,200 into 6 into 2 will give you 38,400 divided by 37.5. Something is wrong, I think so, guys. Just a minute, just hold on. I will come back. Here, guys, everything is correct only. I somehow wrongly used my calculators. I'm using my phone calculator. It is only a purchase price. The first step what we have done is correct. Our intuition will never tell you wrong, because whatever we have done first, that is only correct. Here it is 150. Here it is 25 percentage into 6. Here you will get 1.5. Here if you add, I think so, you will get just a minute, 9,60,000. Okay, if you subtract, you will get, if you take a root value, you will get 800 units. So 3,200 divided by 800 units is equal to 4. Time between the two orders is 3 months. So come up with the last two question. Interesting question, important question. So under row 1 plan, calculate the total earnings and effective rate of earnings for 3 operators. So the actual time taken by 3 operators is 90 hours, 80 hours, Z hours, 60 hours, X, Y, Z. The standard time fixed for producing 1 dozen of articles is 100 hours. So time saved by X is 10, time saved by Y is 20, time saved by Z is 40. The rate wages is rupees 2 per hour. 30. Calculate the variable overhead per hour and amount of fixed overhead from the following. This is the next question. Fine. 29. So what is the formula? Time taken into R plus time taken divided by time allowed into time saved into R. This is your bonus calculation. Okay, that is total earnings plus bonus calculation. Okay, 90 into 2, 80 into 2, 60 into 2, because it is 2 per unit. 90 by 100 into 10, because this 10 is your time saved. This 20 is your time saved. This 40 is your time saved. 90 is your time taken, time allowed. Time taken by time allowed. Formula is there. Answer is 180 plus 18. 160 plus 32, 120 plus 48, total is given. Effective rate, even though if you see, the total earnings may be low. The total earnings may be low. If you see that effective rate, if you see effective rate, it will be increased for per hour rate, for per hour rate, effective hourly per hour. Okay, that is for Z is high, because 198 divided by 90. Okay, for effective rate, the formula is your total earnings divided by time taken. Total earnings by time taken. So total earnings is 198 divided by 90. Now 192 divided by 80. 168 divided by 60 is 2.8. So higher is Z. So here the answer is, they may give you an option like this. They are asking what option will be like total earnings. So it will be like 198 comma 2.2 is 2, or comma next one will be 192 comma 2.4 comma 168 comma 2.8. Okay, that's how they will give the whatever the question you are doing right now. It's a past 10 years question paper you are doing. 10 to 12 years from 2000 syllabus, 16 2012, 2016 syllabus, 2022 syllabus you are doing. So make sure you are focusing. The last question with you guys. From this, our journey comes to an end for that double hundred series. Calculate the variable overhead per hour and the amount of fixed overhead from the following information. Two level of activities given. So what you need to go with the formula differences to find out the variable cost per unit. So 1,53,000 minus 1,25,000, 28,000 minus 21,000 will give you 28,000 divided by 7,000 will give you 4 per hour. On the basis of fixed overhead, we know total budgeted overhead, we will take that level of activity 1,25,000. On that activity level is 21,000 multiplied by variable will give you 41,000. Alternatively, Alternatively, 1,53,000 you'll take. You can take that also. Minus, what is the next one? 28,000 into 4. 28,000 into 4 is 8 was a 32, 80, 130, 112. Okay, this is going to be 112. 1,53,000 minus 112 will give you 41,000. In any way you can do. With this, our double hundred series comes to an end for that cost accounting. I hope you have enjoyed. Here and there, some of the miscommunication or some clarification is needed. We have provided as far as our best scenario. We have given our best efforts to make you comfortable to secure at least 24 marks in your examination so that you may get passed, your group maybe gets cleared, you may get an exemption. It may be helpful for your group 2 preparation. It may be helpful for your CMA final preparation. Everything we have done. Okay. So this PDF is not going to be given. So try to make a screenshot out of it and you can just pause the video and take it. If you want the videos for group 2 for this December 2024 attempt, just do comment below and we are going to start an especially CMA Inter mentorship batch for December 2024 examination. For December 2024 examination, we are going to start it. Okay, it is going to be a nominal price. It is not, we are not going to do it at a free of cost. That CMA Inter mentorship is not going to be at free of cost. We are doing at some nominal value. Here you may clarify your doubts. You will get a scheduled study plan, your test series, everything will be there. It will be very much helpful for self-study students or the repeaters, those who paid huge amount of money in the coaching center are not able to clear, and then they need some guidance throughout that inter career and final career. We are here to guide you. All the best for your last examination for the group 1. Many of the students in India are writing group 1 only. We have got so many messages, so much of love from you guys. For you only I am taking so many efforts, so much of efforts. Till right now it's 3:46 a.m. I'm just now completing it. I need to upload it and you will going to watch it at 6 a.m. All the best. Do the exams well. Just now I'm going to getting into bed. Before that, I want to conclude it with you with a happy note. For a big and every successful business decision, there is always a CMA. I want to see all of you as a CMA signing a report of a cost audit in very soon. All the best. Wishing you once again. Signing off of Sudarshan, the founder and CEO of Hari Academy, CACS CMA. Have a great day.